Hello everyone, this is Jay and this is my weekly Friday video where I review my portfolio to see what's undervalued and what my purchases are going to be like today. I just want to have an idea to see what am I going to be purchasing today based on how the market has been performing as of lately. And of course, I like to buy anything that is in the red in my portfolio, or almost everything that is in the red in my portfolio. So let's go right into my portfolio. But before we start, please don't forget to hit the like button and subscribe to continue to support the channel. All right, let's go right into my portfolio. And my portfolio, it is in the green right now. I'm up $221 right now, up 2%. And as you can see, I don't have much in the red anymore. All Realty Income is my very first one that is actually in the red. It's under my cost right now. $57.69. That's what it closed yesterday, Thursday. I'm 24.8 shares. So I think I am going to be making like a $5 purchase today, most likely. I mentioned in the past, if you have been subscribed to the channel, I mentioned I'm slowing down buying O just because it has become such a high or such a huge position in my portfolio. I don't mind it, honestly, because they are so reliable, and I had to take advantage of the dip when they were like under 57, under $55. They even went all the way down to like $46. I bought like around $49, $50. So I definitely had to take advantage of that. So I took very, very good advantage. Over $1,400 invested in this company. This is with dividends reinvested. So I'm going to be buying like $5 most likely into this company. I should be almost at 25 shares. Hopefully I hit the 25 shares. If not, then in probably 2 more weeks I get another payment from O, the monthly payer, which is that's the awesome part about it. And that dividend snowball continues to grow with O. So I'm gonna be getting paid another probably like $6, I think it is, so which is awesome. And just reinvest and continue to grow that position. My next one, I'm barely in the green pretty much. It is Johnson & Johnson. It has been running up as of lately. I like it. I was really liking it when it was in the mid 150s. So I was buying like $15, $10, $15 on a weekly basis. I'm at 5 shares right now. My cost per share is $160.26. Hopefully they go down a little bit so I can continue bringing my cost down. So if it goes to $160 flat, that would be nice. But I am going to be purchasing a little bit more today, unless it runs up to like $162, $163 today. So, but yeah, I am going to be buying like at least $5, $10 of Johnson & Johnson. But I really like it when it goes under $160, so I can continue bringing my costs down. Most of my other companies are in the green right now. VYM and SCHD, as you guys know, I do my weekly buys of $25 now. VYM, I used to do $15, but I raised it, and I'm going to be doing all of 2024. I'm going to be doing $25 next to SCHD. So $50 of my weekly deposits will be going half and half to these two ETFs. These two ETFs, I definitely want to grow them a lot, and my goal is to pair VYM with SCHD as close as possible, and hopefully have in 2024, I want to have at least like 50% of my portfolio be these two ETFs. So definitely going to be working on that really, really hard this 2024. That's one of my goals. Main Street Capital, it is $43.76, so it's way above my cost. My cost is at $38.14. I bought Main Street Capital quite some time ago. I would say it's one of my oldest holdings, which I really, really like, and it has been performing very good. I'm up 12%, so this is awesome. This is not counting the dividends reinvested that I have reinvested over the period of my holding of MAIN. So I'm definitely really happy about that. My yield on cost right now is 7.39%, which I'm really, really happy about. Procter & Gamble, it is at $140 again. It continues to run up close to $150. My cost per share is $136, so I'm gonna leave it for last. Coca-Cola is already at $59.76. I'm hoping you guys caught that dip. I'm up $16 right now. Pfizer. Oh, I'm definitely buying more Pfizer. I know a lot of you guys have been a lot of the subscribers and people that are watching. If you have not subscribed to the channel, please support the channel by subscribing and hitting the like button. I really, really will appreciate it. But there's always a lot of questions about Pfizer, ticker symbol PFE. I know that there's a lot of panic with this company. I like it. I like the company. Let's take a look in the stock analysis website, which I have it open right here. I was taking a look at it at Pfizer, and this is why a lot of people are nervous about it. In the last year, it is down 41.5%. At $29.09 it closed yesterday. This company has a market cap of $164 billion. Revenue $68 billion. We're gonna go through that information in a few. Earnings per share $1.83. PE ratio 15.90. The forward PE, it is at 13.78. That's what they're predicting right now. But look at that dividend, $1.68 a share per year, 5.78% dividend yield right now. The 52-week range is 52-week low of $25.76 and 52-week high of $51.60. So the next ex-dividend date is going to be January 25th. That's going to be for the next dividend payment. Now let's go into the financials quickly. So right here, as you can see, their revenue has been growing. I know that they have been getting that COVID boost right here. In 2021 to $81 billion, and then 2022 $100 billion. They do estimate that this goes down. They did make, if I'm not mistaken, a new RSV vaccine also, and there's a lot of cases out there. If you are in the healthcare sector, I'm sure you could back this information up. There's a lot of RSV cases out there, and I think that they're gonna get some good sales on that RSV vaccine. So please correct me if I'm wrong, but that's some other stuff that I read. And the RSV, I know I've seen that out there. So, and I've been reading about it too. So definitely something. If you're in the healthcare sector, please let me know if you also see the same thing in your area where you work at. Because I've seen a lot of those cases also. The earnings per share, let me see the earnings per share. Let me go to the chart again. As you can see, it has been growing. Not sure if it's going to continue growing because they did get that COVID boost. But I would think it is going to stay like around this, like around 288 earnings per share, 165, I will say in the future. I cannot predict the future, of course. But I do like this company at the price that it's at right now. In 2021, they had a 392 earnings per share, then 559 in 2022. So they've been making very good money. The free cash flow, let's take a look. As you can see, they did really get that boost right here. $29 billion in 2021. Before, they were like around 12, 10, $13 billion in 2018. In 2022, $26 billion. So that's why I think the price that it's at right now is good. When they had this boost right here, the share price was like around, we can take a look. I believe it was in the 40s. That's why I didn't invest into Pfizer then. I really wanted to invest in the company, but I was waiting for it to go down. So then let's take a look at the, let me take a look. I wanted to take a look at the shares. So the shares outstanding, as you can see right here, they have been going down. So they haven't been diluting the shareholders, which is great. That's really, really good. They have been buying back shares, which is awesome. In 2019, they have 5.5 billion shares. And in 2022, 5.6. So they have been staying like pretty much there. But if you see in 2013, they had 6.8 billion shares. So they have been buying back some shares very slowly, but they have been. So that's pretty good. Let's take a look at the debt, and let's take a look at the chart right here. And right here, as you can see, they are paying off some debt. They did have a lot of debt in 2019 at $52 billion. But in 2020, they went down to $39 billion, then $38 billion in 2021, then $35 billion in 2022. I do believe they have been bringing down debt even in 2023. I have to do a little bit more research in that. But they are paying down debt, which is also awesome. And then let's take a look at the cash flow, because this is what they use to pay that dividend. And as you can see right here, they definitely got a real big boost in 2021 to $29 billion in cash flow. Then it went down in 2022 to $26 billion. I have to take a look to see, just to see how much this year. I got to look at a little bit more information, definitely. But if you see the free cash flow margin, they always have a great margin. This company right here, at 20-something%. Of course, in 2021, they had that 36%. But if you see, they always have very good margins. 27% in 2015, 26%, 2016, 17, also 20-something%. Then 2018, they went up to 33%. So they pretty much have the same good margin with the free cash flow, which is good. I really, really like that they have good margins. And let's go into the dividends tab right here. So right now, if you pick up any shares of Pfizer, you'll get that 5.78% dividend yield. Annual dividend, it will be $1.68 a share per year. That payout ratio is what is getting a lot of people nervous at 91% right now. They're calculating right here in stock analysis. I like to look at multiple sources just to make sure. And that dividend growth, 2.48%. They did just increase their dividend by 2%. So their next dividend right now is going to be 42 cents, which the pay date it is in March, actually. March of 2024, March 1st, the ex-dividend date. So if you want to add this company to your portfolio, add it before January 25th so you can qualify for that next dividend if you're looking into it. But of course, always do your research. I'm not a financial advisor, guys, but this is a company that I like. I'm planning on holding long term also. Will I get burned? Maybe. But I could have gotten burned with old Realty Income, but it looks like it's performing very good after that big dip where everyone got nervous and everything. So I see that a lot of people get very, very nervous with some of these companies when they go down in price. I like it. I do some research to see what is going on. And if it's something that is just temporary, I'll go ahead and I'll buy into the company if I really, really like the company. So I like when it's red because I see it as a sell price, to be honest with you. As long as when I do my research, I do like everything that I see. You cannot predict. Well, I cannot predict the future. Maybe some other people can, but I definitely cannot predict the future. But whenever I see a company that is to me what is to me on sale, I definitely buy into it. All right, Vici has been running up as of lately. Definitely, it went up to $31.92. My cost per share it is $30. If I have an extra $5, I'm gonna put it into Vici because I like this real estate company. And before the real estate sector goes up even more, once they start cutting rates, which is what everyone is expecting, I definitely want to continue growing this position right here in Vici. So I'm probably going to put like $5 if I have extra. I'm going to leave it for last. Starbucks, it is $93.55. Actually, before I grow Vici, I might throw the $5. I'm going to see how much I have extra. If I can throw $5 into each one of these, I will. It is much closer, Starbucks, to my cost. My cost is $88.81. I'm up right now in my position. So I think I'm going to buy. I think I'm going to buy today because I really want to grow this position. I'm gonna continue to support the caffeine company that everyone is addicted to. There's a lot of people. I'm telling you, I see it at work. Also, that I see people, they just don't stop buying that Starbucks coffee. And every time I pass by a Starbucks, there's always a line. There's always people. Some people even post pictures on social media. Like everyone is just so addicted to Starbucks. Hey, trust me, continue buying Starbucks. I do not mind, so I can continue getting those dividends. And I'm sure a lot of you out there that are invested into Starbucks also don't mind that people are buying. I do stick. Okay, I'm not gonna talk bad about Starbucks. I think they're a very, very good company, and I definitely want to continue buying shares. But I do go in with the free coffee at my job. I do get my free coffee at my job. It saves me money. It saves me $5, $4 from going to Starbucks. So that's what I do, and then I just put that into the into the company. So definitely, that is what I do. Do you do that? Do you also just get your free coffee at work so you can save up some money, maybe put that money into the stock market? That's also what helps me putting my weekly deposit into the stock market. That's why I deposit like around $100 at least into the stock market so I can continue buying shares of my favorite companies. And then my last one, it is CanView, ticker symbol KVUE, still under my cost. I started very close to IPO, so my cost per share right now is $23.16. I'm most likely going to be buying another $5 just because it's still in the red. I want to continue bringing my costs. I want to hold this company long term, so this will be my last buy, I'm sure, before Starbucks and Vici, unless Starbucks goes up today crazy. But if he stays like this, close to my cost, $93.55, I am gonna buy. But CanView, yeah, I've been buying like $5 every week, and look at the position right now, 10.7 shares right now, over $240 invested in this company, and I think I have received one or two dividends from them, so I reinvested it since it's always under my cost. So that's definitely very, very nice. All right, everyone. Please let me know in the comment section which companies are you buying, what's on sale. I see Hershey on sale also. Maybe I should have also checked that one out in stock analysis, but I don't want to make this any longer. Hershey has been on a dip also as of lately. It's another company that I like. I'm watching Visa. Maybe I'll be adding in 2024 if it goes down. It is one of the companies that I really want to add into my portfolio. I really like the growth. The dividend growth is really nice. Their dividend yield is very, very small. But I really would like to buy that company, hold it long term, and see how it performs. If the dividend yield goes up a lot to where I can use that dividend for income in the future, I will hold it. If not, if it just went up a lot in price, and I can sell it and maybe put the money into SCHD or VYM to get a higher yield, I might do that. That's what I think is going to be my plan with Visa, and I'm going to be very transparent with you guys. What's your plan with Visa? I know some of you guys hold it. I think Legendary buys it like a lot, and he has a nice position. But yeah, please let me know in the comment section. All right, everyone. This is it. Please don't forget to hit the like button and subscribe so I can reach my goal. Right now is 500 subscribers. I could not believe that I have over 400 subscribers right now. So definitely trying to get to 500 subscribers, and I really appreciate the support. I'll be posting a video on Sunday, which is my weekly video where I'm going to show my purchases for today. I'm going to do my budget right now. Before I go to the gym for a little bit, and then I go to work. So I'm gonna make my deposit. So, all right, guys. I hope you all have a nice day, and I'll see you on the next one. Thank you. Disclaimer: I am not a financial advisor, and I'm just sharing my experience in the stock market in my journey, and this is for entertainment purposes only. Thank you.